Traders, welcome back. So I've been away and then I haven't been feeling well, blah, blah, blah. Excuses, I'm back. And so I'm very excited about this week. So let's have a quick talk about what's heading into the economic calendar. For the most part, it is not doom and gloom. Generally, with regards to the G7 to G9 countries, most of them, inflation's coming down. Things are actually looking good. There's good stuff and bad stuff, but there's more good stuff than bad stuff. So yes, there could be some housing bubbles and second-hand car market bubbles. Those are all good things as far as I'm concerned. If a market is overpriced, it needs to correct. And I think most of you, if you think about it, would agree with me on that. And then we might have price disparity. So earning wealth gaps, those are big things. That's actually one of the biggest causes, if not the single biggest cause of most of the issues we face today, believe it or not. And so we're starting to see, you've got the writers' strike, you've got actors' strike happening in the US as well as UPS. So you've got all these kind of things happening, which is triggered, by the way, by the wealth gap. And these are usually also the single biggest causes of civil war. This goes all the way back to let them eat cake. To the French Revolution. Back then when they would decapitate, literally they would overthrow them and it would be a violent overthrow, civil war, and kind of reappropriate the wealth. So these are the kind of issues that we face today. Just so you're aware, generally, globally, these are the kind of issues we have. But if you put those aside for the moment, economically, a lot of countries are actually doing really way better than they were doing 4 or 5 years ago. And there's a lot of misinformation going out there, but it is actually the case. So that being said, let's have a look at the news coming out this coming week. And really, all I want you to take away from this is that these are events that are likely to spike the charts. So if you're trading on the 5-minute, the 50-minute without a stop loss, this is likely to cause a lot of pain to your account and obviously subsequently to you. So we don't do that. We either don't trade, don't be exposed in the market during these news events, or we have a stop loss in place, and of course we have calculated or position sized ourselves correctly. Mainly on the US, there'll be a little bit about the manufacturing index here, and Friday we've got employment figures, and that really just highlights, are we getting mass unemployment? Is something happening? These are the things. But remember that this data is always reported after. In other words, all of these wait for the data to be reported for the last week or for the last month, and so there's a lagging effect. So when we look at the stuff, the results are always lagging, but the fact is that the market can have a response to it, good or bad. It doesn't matter. It doesn't even matter what the numbers are. The market can have a good or a bad response to it. These are really the events that I'm going to be paying attention to. That being said, let's move on to the most important stuff, which is the charts. Okay, so we'll start off with the volatility index, which is relatively low. As I've said in previous videos, it being low happens all the time, frequently, and it being low is not necessarily a warning or a precursor to a massive market crash. This spike to the upside is what happens when the market is crashing. It being low is boring potentially because it means that the markets aren't really necessarily trending that much. We need some volatility to get trends, but at the same time, it isn't necessarily a bad thing. This is just really something where I'd be paying attention to where you get the spikes is where you get the issues. Right now, we're not in that particular area, and this is my danger zone, and we're not anywhere near the danger zone at this point in time. So there we go. Just thought I would kind of recap on that for people who might be watching this for the first time. All right, so the dollar itself, remember the dollar is right now is obviously the largest currency or most widely used currency globally. And we can see that the last week has been a particularly bearish week for it, similar to something that we had in June. We've had that actually, and remember that last year, for most of the year, the dollar was strengthening like crazy. So let's not exaggerate this. All that we've really done is essentially come back down to a previous level of resistance, which we're potentially going to test for support. It's overextended to the downside. We've got a little bit of a bullish candle here. What we could see happen this week is a retracement within a downtrend. So I'd be looking to see if it heads up towards 1.06, I beg your pardon, 100.60, or potentially back up to 100 and potentially then decides by the end of the week to continue low. We'll see if that's going to be the case. But right now, that is a weaker US dollar, potentially overextended and likely to do a bit of a retracement in the early part of the week. If we have a look at euro dollar, we can see again, this has come back up to the next level of support and resistance. And this week could see a retracement. So I'd be looking for pullbacks. That actually means as a day trader, I'd be looking for temporary shorting opportunities once I've seen a shift in momentum on the 1 hour, 30-minute, for example. But then as a day trader, end of day trader, I beg your pardon, I'd be looking for pullbacks and then looking for buying opportunities later in the week. Same thing would happen with sterling. For the most part, you can see overextended, needs to come back down towards 1.3, back down towards the previous high would be a really nice level. Often if we throw a Fibonacci measurement over that, it often can overlap. So in this particular case, any kind of a pullback to the 50 to 618 in this area would be, for me, potentially a good buying opportunity. Obviously, in line with the strategy, I'd be looking for a buy setup and then looking for a trend continuation there. Aussie dollar as well. You can see found some resistance here on the daily. Just going to mark that, and I'd be looking for any kind of pullbacks into these previous highs over here. So same thing again. I'm looking this week for any kind of retracements and then buying opportunities in line with a weaker dollar and looking for majors to strengthen against that. Looking at the yen pairs as well, you can see a big correction here. We've broken the low on the daily. So what does that mean? It means immediately we're in a weekly retracement. So that's what I know. We've got to move up. We've got a weekly retracement back in towards these previous highs here, which could be found where we could find some support, and we could find it continues to strengthen from that side. We've got a little bit of a contradiction here. We've got that monthly producing a bearish, almost bearish engulfing candle, where we could see a move back down to the downside. So we'll see how that goes. Ultimately, what I'm looking for this week is to see if we see this finish bullishly this coming week. So I'll be looking for a green candle this week, a coming week, and then to see if we see a continuation to the upside. On the other hand, should we finish much lower down below here, then I'll be looking for continuations to the downside. Dollar Swiss is possibly one of the most overextended pairs. Definitely, I can see that the next level down is a little bit further down towards 0.85. But certainly it is now in an area where I would be expecting this to start to turn around and commit to some sort of retracement this coming week. If these continue down, then we'd be looking in a rarer situation. It's in situations like this, it's already overextended. It should retrace now. It could retrace anywhere along these points here, but if it keeps going, then we're in a very unusual situation where obviously that weaker dollar is driving everything. And let's finish off with that dollar CAD as well. You can see dollar CAD, this is where it gets interesting for me. This is a very strong bullish engulfing candle off a previous low, so I'm going to mark this low here. We've got bullish divergence. Bullish divergence here, hinting in this particular case that it's highly likely we're going to see dollar CAD push back up towards these previous lows over here. All right, so that's what I'll be looking for. We've also seen that we've had a pullback down here on the monthly into the previous highs, back into the moving averages. This candle looking nice and bullish. This is a particularly bullish setup. It might try and go down a little bit further, but now it looks like it's attempting to turn around, and there could be some good opportunities from 32.18 back up to this previous level of support. Euro GBP's got a very similar type of pattern here. We've got a very slightly fresh low here. We've got a very strong bullish engulfing reversal candle here, and another bullish candle here. So for me, this sits on my watch list here, combined, by the way, with bullish divergence here. I'm looking for moves back up, certainly back up into these highs at the very least for day trading opportunities, and potentially back up here. But I think it's going to hit some resistance around the 50-period moving average, which overlaps with the 0.86 level. So for me, that is certainly on my watch list for buying opportunities. Then looking at Euro Yen, we've had a good strong correction, bit of an indecision but bullish candle within a larger overall trend. We are starting to become a bit overextended on the monthly. But so this week for me is interesting. Are we going to find that the market attempts to keep going, or is it potentially going to come up here and double top? It looks more bullish than bearish right now, but there's also a little bit, like I said, to be an indecision candle as well as a bit overextended on the monthly adds some caution there. So if I compare that, for example, to Aussie Yen, similar downtrend on the daily, a little bit of a bullish candle here, although it's more of a red candle, but it is bullish. It's got the strong wick rejection below that, but it's also at a strong level of resistance. So to me, this hints that this is going to be difficult for this to resume this trend to the upside. I just want to compare it to a few of the other dollar yen yen crosses, I beg your pardon. Kiwi yen, you can see sitting right at resistance here. I'm going to mark that level. That's a problem. Let's see how CAD yen is doing. CAD yen has pulled back. Here again, I'd love a bullish candle next week, but it's also a double top. So again, I'm going to mark that as well. So we've got a double top there. So yen pairs might be coming to an end soon. A little bit very overextended on Swissy yen. Bullish candle here, definitely a level I'm going to mark on this chart as well. Definitely a level of resistance it's battling with there. Okay, so overall the yen pairs could be encountering some difficulty there. So I would be super cautious on those. Actually, there's a lot of really interesting stuff happening here. So EuroCAD, beautiful. I would absolutely be looking for any pullbacks on the daily here, looking for continuations to the upside. It's now looking more and more like an uptrend on the monthly and looking very good, but it's overextended. I need some pullbacks there, so that looks good. Euro Aussie also looks good, so I'm going to add in a little potential bullish. This now becomes a triple bottom and a potential bullish move to the upside. Euro Kiwi also showing some possibility there for a move to the upside. That would become a bit of a double bottom. I hate it when it never puts the arrow exactly where I want it. And then we've got Pound CAD, also same thing, very overextended, need a pullback and looking for a trend continuation. Pound Aussie also producing a higher low and a bullish candle, so I quite like that. There we go. Pound Kiwi, not so much. Aussie Kiwi, to me, very interesting, nice and bearish. Look at these strong rejections over here. So I'll be looking for trend continuations to the downside. So that's a really strong sign of weakness. I'd be looking for this head down to the next level of support and resistance. Spoke about this before. KiwiCAD has produced some really nice returns. I got stopped out here. That was a very nice trade to the upside. Very strong bullish engulfing candle, looking for good to continue here. So likely to see this continue up, but I'd be looking for pullbacks and a continuation to the upside. So basically a lot of the CAD crosses are offering buy opportunities when they retrace, which is hopefully this week and not next week. Looking at gold. So gold has broken through this downward trend line. It's now starting to look nice and bullish. We've got a nice swing low here on the weekly. We're in this area. I spoke about this with some of my team. We've got some really nice, this is a buy area for potentially if price produced a bullish candle, which it currently is. A break above the high of June for me is absolutely, well, it's a buy, but I am worried about this level of resistance. Okay, so I'm cautiously bullish on this. Any kind of bullish signals here looking for this, but absolutely cautious to make sure I take profit as we enter this area because we're not free. This is a danger zone and we might not necessarily get through it for a while. We could get through it immediately, but I'm still cautious on that. Silver, because of that, silver looks ridiculous. This is very bullish. Yes, there's an area, but it looks as though it's trying to close across that. So this week I might be looking for pullbacks and continuations to the upside. That looks really nice and good. Let's look at copper. Copper also looking nice and bullish. So metals principally are looking nice and bullish. Let's move on to gases, energy. Natural gas has come out. I'm stopped. I've closed out all these positions. For now, they are just not able to get through this. We're now in a range. So we've gone from a downtrend to a range. We've got bullish divergence. So a breakout would be a buy opportunity. We just haven't got that right now. So if you've been following my stuff, you would be aware of that build-up over the last few weeks. Here we've got a nice Brent crude has broken out. I'm looking for pullbacks and a nice bullish setup in this area. Not sure which day it'll happen on, but I'll be looking for that as a continuation to the upside. Brent crude will be the same thing. I'll be looking for a pullback and looking for buying opportunities to the upside. So there's a lot of things that could potentially happen in the market this week. Let's go through wheat. Wheat, I mean, it all looks bullish, but no great setups there. We've got coffee. Come on. Coffee just is a mess. Whoops. Oops. Okay, I'll have to come and bring that one back. Sugar is starting to look bullish again. I mean, I would have, again, stand by that I would have loved to have seen a correction all the way down, but it looks like it wants to keep trying. Not great. No great setups though, again, and this is still garbage. Cotton is still garbage. Okay, let's look at the global indices. Nice and bullish for the most part. Some really nice moves up here. I've been away for a while. Obviously, looking at it now in hindsight, this was a no-brainer. But you can see this range it's stuck in. So I'm going to mark this range. I think it's a good idea to do that. So let's just mark it. You can see this range. I'm just going to mark it like that until we get out of it. I would say this. It's looking more bullish than bearish. This week, I'm looking for it to break that 35,000 level. Just close above that and trying to continue to the upside. S&P also looking good right now. I mean, I'm expecting retracements and continuations, but it looks okay. Hopefully, most of you have been padding. I hope most of you have been building your portfolios. If you're not comfortable with stocks, at the very least, you should be looking at indices and you should be looking at buying and holding. We could be at the beginning of our next big bull run. It's something to be aware of. Don't let the chicken littles put you off. It's certainly something if you're young to be thinking about, even if it's just $50 or $100 adding to that. Okay. Don't forget your pensions. If you have a pension, they're investing in it. So that is one thing to keep in mind. Nasdaq still looks nice and bullish. I'm looking, I mean, I can see a bit of a failure on Friday, but I'm looking for pullbacks and continuations at this time. I mean, if I look here, for example, the Nasdaq's got a bit of bearish divergence on it, so we see that, but the weekly looks really nice and healthy. Monthly does look overextended. I'd love to see a pullback, but we are in a bull market. Just in case anyone is wondering, we are in a bull market. Okay, so we've got my potential area of support, be looking for some opportunities here. I'm going to mark it as, for me, looking for these opportunities. Nice little breakout candle. Didn't close near the highs. That's a really strong sign of momentum. And I would say we're range bound here. So excuse me for doing this, but I'm going to add one of those as well. I like to do this because it reminds me that we are in a range. And then when breakouts, I know that. Like it's a sign. FTSE. FTSE is in a downtrend on the daily, make no mistake about it. It's actually in a downtrend on the weekly. But on a monthly, it's giving very, very mixed signals. I would say that this level of support is very important. When I look at the inflation figures, and I've seen a lot of graphs and charts for the G7, the UK is performing the worst. I happen to live in the UK, and also I used to live in South Africa, so I've lived in countries where I've seen economies go down. So it happens, and I'm just saying it's something to be aware of. I want to see that bit of a turnaround there. There's no excuse. There's no reason why we shouldn't, but there is some ties to Brexit. That is partly because that trade agreements are taking a hit, and so we're not necessarily benefiting the way we should. Some not very smart moves there, and I think most people regret it. I would say that's a nice little bullish candle there. I like that. Let's see if the DAX can push its way past that. Remember that it's operating at all-time highs. A little bit of potential bearish divergence, but for the most part, everything still at this time looks good. And remember, ladies and gentlemen, it takes about 6 to 18 months to go from a bull market to a bear market. We've just got into a bull market. It took about a year and a bit to turn around, or at least it took a correction and then about 6 months to turn around. We've just got into a bull market. It's not impossible, but it's highly unlikely we will go back into a bear market immediately. It's highly unlikely. So for now, let's just pretend we're in a bull market. S&P, the ASX in Australia, nice and bullish, guys. Nice and bullish, strong, bullish, engulfing candle. Okay, likely to see a continuation. If it can break through this level, continue up, could be a good week for the ASX. And the Nikkei, very much overdue for a correction. Right down to here would be good. However, it is in this area, and therefore, this could be the point at which it turns around. I'm just going to mark this as an acceptable area for it to turn around. And in fact, I'm just going to raise it a little bit. So anywhere in that area is acceptable for it to turn around and still qualify. Why do you keep doing this to me? There we go. Just want to expand that a bit. Cool. Let's move on to individual equities. Apple is, first $1 trillion company. Absolutely crazy. We live in this world. Overextended for sure. We do need a bit of a pullback, but it's the same as what you've just heard me talk about in the indices. This could be a potential continuation. I'm going to mark it as that. I would prefer a correction. You've got to think of corrections not as a sign of doom, but as a buying opportunity. You have to change the way you think. That's how Buffett thinks. That's how the seasoned traders and investors think. They see corrections as buying opportunities, not as reasons to panic. So I'm just highlighting that could be a potential continuation if we break the high of this. Amazon, strong bullish engulfing. It is overextended as well, but it's also now above the 50-period moving average on the monthly, and we could see it continue up. So any kind of pullbacks for me could be potential buying opportunities. We've got AT&T going down to the downside. Honestly, there's a lot of reasons for this. It's more bearish than bullish. This for me is not seen. It's not on the list because it's a good stock. It's on the list because they've been making some very odd decisions lately, and I wanted to see if that would ultimately reveal itself in their performance. Okay, so in the same way that policies can impact economics, so tax hikes or tax reductions and QE can change economies. Same thing can do with corporate policies, can change their performance. So if their policy is not gelling with their customers, there will be a potential issue here. So look at this. This is interesting. ARK starting to really turn around. Now, a big chunk of that is potential technology stocks. And I don't know if this is true or not, meaning I haven't verified it, but I understand there was a post the other day saying they've just bought into Meta. So that probably means, and this is a joke, you should probably sell Meta because ARK's performance has been so atrocious lately. But I'm a big fan of theirs, and I do own some of their stuff. So look at this as well. We're now in Glencore. That's a really nice monthly level of support. I need to put that in. Sometimes it's only obvious in hindsight, which is okay. We learn from everything. And so that's nice and bullish over there. So we've got nice touches there, bullish candles. If we break the high of this, we're likely to see it continue. And it's a double bottom effectively, or triple bottom, which way you want to call it. So it's a nice break for Glencore to take so it can resume. We've got Tesco. It's okay. Look, it's a double top here, but it's going to try and regroup if we can and see a bullish candle here. I'd be looking for a turnaround. That's a potential turning point here. Again, a break above the high of this for me would be a potential buying signal, okay, because we'll see if that's going to be the case. So we're looking to see if we get a break above that. We'll see. Amex battling with this level, really battling with it, but overall, I'm going to say it's still more bullish than bearish. Okay, so this week, or actually either this week or next week, if I see a momentum candle, a nice solid bullish candle that closes up here on this side, that would be a good sign. Berkshire Hathaway is, okay, so we need to talk about this because we can see exhaustion coming in here. A lot of failure. So the only way out of this is either to have a correction back down to one of these 2 or 3 levels, or a momentum candle that breaks through that. It is battling here, and I need to mark that level. Okay, it's definitely battling with that. And so I need to mark that. Something we need to get through. Overall, in principle, I believe that there's no reason why I can't do that. And I'm also going to just copy this one up here and just place it up there. That's what we're looking to get to. Coca-Cola. KO. Nice little bullish candle. Looks really good. And a bullish monthly candle, bullish weekly candle. Those are very nice signs, guys. BP battling. That's fine. ExxonMobil will be similar. They're always going to be very much the same things there. We've got energy companies that are kind of battling with that, so not too worried about those. General Motors has got to get out of its range. You can see it here, and when it breaks out, you're going to see it move. Obviously, it'll almost immediately probably go to 50. So the question is, when is that going to be the case? Well, we're just going to have to find out. I'm going to extend this because that's probably going to be relevant at some point. Let's look at JP Morgan, which was looking good the other day. A little bit overextended here, running out of steam. Needs a bit of a pullback and a continuation, but looks good otherwise within its journey on its way up to the old highs. Looking good. Adidas. Okay, Adidas weekly looks good. So in isolation, this looks nice and bullish. My expectation is to see it go up. There is a little bit of a level of resistance here. I'm going to mark that. But for the most part, I like that. I like it. Looks good. Look, it's managing to break through these levels of previous resistance. Meta is ridiculous. Why is it ridiculous? Because this is marching soldiers. This is just very much institutional buying. It is so orderly. You cannot have that randomly happening. It is ridiculous. I see this as, we'll find out at some point, but possibly somebody else is buying into it, but this is very institutional orderly buying. It's very much overextended. You shouldn't get something like that happening. It's a sign of incredible strength, but I'm not really seeing where there's a vast improvement of that. The metaverse, from what I can tell, is, excuse my language, a shit idea. From what the feedback we're getting, the Apple version of that is already looking better. So I'm not really sure where this is coming from, but I'm curious. That could end up being a story down the line. I would say we do need a bit of a correction, but there's no signs of it. It's very, very, very steady. It's just a steady heartbeat. Even here, we're starting to create fresh highs on the MACD, so there's no complaints here. It's starting to shift bullish here. So here's my thing. For now, for me, I see this as just bullish. Okay, we do need a weekly correction down to any of these levels would be an amazing kind of a pullback. I'd love it to come back down to 250. 250 would be an acceptable pullback. I'm not seeing any signs of weakness, but I am very alarmed because it can't keep going. But if somebody's buying it, it is going to keep doing that. I guess to wrap up, principally I'm bullish on this, but at some point it's going to have a bit of a correction. And as I said, a correction down to 250 would be the best, most healthy kind of pullback I can see. And hopefully one day we'll figure out why this is happening. Morgan Stanley. Consolidation, it's okay. It's a bit of a mess right now. It needs to push its way through that. NVIDIA, as we said, is still in the danger zone. If the rest of the markets continue to be ridiculously bullish, we could see this try and shoot up. But you can see the exhaustion starting to come up. I've put this area and I put 500 in because it's a nice big round number. What I'm looking for is a red candle. Once we get the red candle, then we're likely to see the correction. But this is something that is going to happen over, as I said, over a couple of months, or several months actually. Netflix broken, nice. That's what I call about a nice bullish momentum candle. Very strong, very clear signal that it's taking off. Consolidations. Look at this. A move up to test the level, momentum candle to break through, then a move on, then just a consolidation, retest, consolidation, continuation. So this is all very nice and healthy. Okay. Any kind of pullbacks are good. You can see again, you can see that similar to Berkshire Hathaway. You can see it battling here. Any kind of a pullback here, bullish candle over the next couple of months would be a nice buying opportunity. Love it. So I'm going to put that in. Any kind of a pullback into this area for me would be a nice buying opportunity. PayPal, that's a good start, guys. I need you to break through this general downward bearish momentum. Are we seeing any bullish divergence? Very much so, guys. Look at the MACD trending higher. Look at these trending lower. We've got clear bullish divergence. It is desperately trying to break free. It'll pick up momentum once it gets above the weekly 50-period moving average. Then it'll start to take off and it'll hit 90. Then it's got to get past that. And then it'll start to pick up again. But it's very, very slow and I'm not really sure. So until I see that, I'm going to be very cautious. Spotify. Fine, looks good. Nice little bullish move here, but I, again, would love to see that kind of take a bit of a breather. But in the bigger picture, it's looking good. It's got to get above that 50-period moving average. Spider just stuck inside this mess, needs to break out of that. FedEx looking good. So finally managing to break above that. So I think I started tracking this around here, and it was bearish, 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 and it's now broken the highs of when I was asked to look after it. So interesting to see that faith in a stock take off. Look at this beautiful uptrend here, nice high lows, high highs. So remember that if anyone's just watching this for the first time, I've used to be a big fan of Elon Musk, used to be up until about 2020. Massive fan of Tesla, love the idea of electric everything, or changing at least our dependency on energy. Big fan of all of that. Not currently a massive fan of Musk. Not sure where he is on his journey. But I cannot deny that Tesla is doing well, especially if it breaks this downward trend, and I can't see why it won't go up and tap 300. That's where it's currently on its way to, which will breach this line. And then we'll have to see. If it will break above that, then it looks like it's on its way back up to all-time highs. But make no mistake, that part of the reason it's climbing is because all tech stocks are climbing, and not because Tesla is some magic lamp of some sort, or some golden goose necessarily. Vanguard breaking through this consolidation. So big, strong consolidation, bullish signal, and a breakout, a retest, and a continuation, and a momentum candle pushing it through this level. Very strong, nice and healthy. It's got a little bit of potential resistance where it is now, and another little bit further up. But for the most part, it broke out through this level, so that can go, and it should be good. I'm looking for pullbacks. Really nice little setups here for day trading or swing trading, I beg your pardon. There's been some good opportunities here. And again, now we're heading into the bit of that weekly overextended or potentially monthly overextended. So I'm more cautious on a few of those things, but otherwise, overall things look really nice and good. Quickly have a look at 10-year T-note, which is having a strong reaction. And I think it's worthwhile putting in a level here. I'll do it on the monthly. Putting that in fact, I'm going to move it up a little bit. So there we go. So we've got, I'm not going to worry about this just yet. We've got a strong level of resistance. Effectively, I think we can just say we're range bound for now. If we have a look at EURUSD, this is a mess. You can see strong level of resistance just here and stuck below that. Okay, so the same thing. We've got, it's actually right now it's giving us very mixed signals. Could actually end up turning bearish. So I'm just going to say nothing at this time. Cryptos, wrapping up on cryptos. You can see battling with this level of resistance when you look at it, level of support here. Strong level of resistance. A momentum candle here would be good. You can see even here on the weekly, it's battling with that. There's no doubt that that level is a little bit of an issue to it. I'm just going to adjust it up so you can see it here. Okay, that's the level it's got to get past this week. Bit of a nice little consolidation here. It's got a good chance of breaking out, especially if other tech stocks do as well. Ethereum is trending up a little bit better. Nice little bullish candle here. It's got to get past this. It has the same problem. I'm just going to adjust this downward a little bit and put it there. Need to see it get out through that, but I'm optimistic. Solana's looking good. See how it started fresh highs here. Hasn't been this high since November. So looking good to see it break out. And you can see that tight consolidation and a breakout there. Once it kind of crosses the line, it needs to go a bit further before it's really bullish, but it's looking good. Cardano's attempting to turn around as well. Binance is also, look at this, just no more real sellers below here, more buyers, but not enough buyers to take it up. But you can see there's a change happening. Strong bullish trend on the MACD, hasn't actually changed its future. So it's almost like you could see into the future. It hasn't changed its future yet, but it is trying to. So there's its future is still unclear at this time, but it's looking a little bit better there. Anything else here? So we've got Digital World, which continues to sink, and Anheuser-Busch, which is starting to recover. So these are just ones where I'm tracking more for out of interest socially. That's it. So ladies and gents, traders, so far there's plenty of opportunities this coming week. Please be sensible with our risk. Only take the trades that match your strategy. Make sure that you position size. Make sure you've got your stop losses in. Keep your headspace nice and clean and calm. Make sure you're happy with the trades you do. Review your trades. Do all the sensible things that make your next week even better. But there are opportunities, and so far, don't let a lot of the terrible media and chicken littles make your life and make you feel like there's just nothing but doom and gloom on the horizon. Remember, COVID is behind us for largely. And life is not necessarily all bad. Okay, climate crisis is probably our biggest problem, and I'm not trying to moan about it. So I'm saying right now that's probably our biggest thing, and then a few other things. I'll leave you with that. Otherwise, I'm going to sound like all I'm doing is just crybabying about stuff. But anyway, traders, have a great week, and I look forward to seeing you in the next week's video.